think the sales at 3,917 crores are 3.6% higher, from the subsequent quarter, and 5.4% on corresponding quarter. There has been substantial improvement in the Ebitda margins, as we've been speaking about over earlier earning calls. Team has worked hard and delivered a good Ebitda margin. And also, I'm pleased to say that our effective tax rate has substantially improved, because most of our major subsidiaries have done well this quarter. And we do look forward to delivering similar performances going forward. And now, to give you complete, financial commentary and details, I would hand this call over to Mr. Swaminathan. Ramesh, over to you.
Thank you, Dr. Sharma. And dear friends, welcome to Q3FY21. Happy to share with you a good set of numbers after quite some time. Let me walk you through the key aspects of our Q3 performance. Q3 has been a good quarter for us, with sequential sales growth across all markets, highlighted by 5% growth year-on-year on the domestic formulations business and 4% growth in US sales, with continuous ramp-up of albuterol. Despite the impact of a weak flu season seen across various parts of the globe, we've been able to post sales growth both sequentially vis-a-vis Q2 as well as year-on-year vis-a-vis Q3 FY20. The operating Ebitda has also improved sequentially for the fourth quarter in a row due to improvement in business mix and reflects in some of the cost optimization efforts on the profitability front. Talking about sales, US sales grew by 4% sequentially at $188 million in Q3 FY21 as compared to $180 million in Q2, and grew by 1% as compared to Q3 FY20. The sequential growth was driven up by ramp-up in albuterol, as well as new products like lapatinib, tacrolimus, etc. The demand for seasonal products continues to be pretty weak on back of, in fact, the weakest flu seasons in the last decade, leading to a fall in quite a few of those products as compared to the previous year. Other inline products, however, remain stable. India region saw a growth of 5% year-on-year, since demand for acute as well as chronic products picked up as the market began to open up, leading to higher patient visits to the clinics. Despite a low contribution from COVID therapy products, Lupin was able to match IPM growth this quarter due to superior performance of our chronic portfolio. API sales degrew quarter-on-quarter due to low volumes of some of our antibiotic APIs on account of weaker flu season in most parts of the world. Gross margins were up by 1.4% vis-a-vis the previous quarter. It's at 64.9%, driven by improvement in business mix across regions and continued moderation of freight rates. We did some excellent work on the manpower cost front. Employee benefits expenses in Q3 came in at 707 crores as compared to 685 crores in Q2 on account of increments rolled out during the quarter and certain one-time restructuring costs. However, you recognize this is actually quite some amounts lower as compared to the previous years. Employee benefits have come down to less than 18% as a percentage of sales from 20% that we saw in FY20. And we will continue to keep our efforts to improve from the current levels. On the manufacturing other expenses front, there's of course a reduction. The decrease was driven by lower forex losses, lower R&D due to spacing off and of course a higher spend of Rnd expenses and higher royalty on partnered products. The most important line from our perspective, Ebitda. Operating Ebitda is 18.6%, excluding forex and other income. However, the top line Ebitda is 20.4%, as you recognize. On the other operating income line, we saw the full impact of loss of MEIS export benefits for this quarter, and barring the one-off income linked to litigation settlement recognized in Q3, this would have been about 25 to 30 on a normalized basis. To repeat again, Q3 operating EBITDA adjusted for the one-off is about 18.6%, excluding Forex and other income. And this compares well with Q2 of 16.8, actually an increase of 1.8%, as you recognize. On the ETR front, the impact of various initiatives taken to rationalize ETR in all our key subsidiaries, with all our key subsidiaries reporting profits in Q3. And that would actually be a good reason for the ETR to come down to 15.9%. But we would also note that this is, for the full year, we would expect the ETR to be in the mid-30s. With this, may I open the floor for discussions?
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask question may raise your hand from participants tab on your screen. Participants are requested to use headphone while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Now, Mr. Kunal Dhamesha.
Yes, thank you for taking my question. Good morning, everyone. So the first question is on the specialty rationalization that we have done. So have all the benefits of that reduction in sales force and some of the infrastructure, front-end infrastructure cost efficiencies have flowed into this quarter, or do we expect some more savings to continue?
They have flown, Kunal, into this quarter, and we will take a stock of how things change over the next couple of quarters with regard to the COVID environment and related impact to the ability, to reach the doctor's office to determine if there's a need to do any further adjustments.
Okay. And secondly, on the R&D expense, which has decreased significantly in the quarter three. So what would be our expectation for quarter four and also for the FY22?
Yeah, we expect to keep R&D at the 9% level. I mean, as you can see, we used to be at a 10% level as of the last fiscal year, and managing it at the 9% level. So we can expect to see that going forward.
Okay, thank you.
Thank you, Mr. Kunal. Now I would request Nithya Balasubramaniam.
Yeah, hi. So quick question on the respiratory generic products and the pipeline. So in terms of albuterol, what is the kind of market share ramp up are you seeing? I think the weekly TRX data is showing a little bit of dip. So any comments on what might be the reasons, and is there any capacity constraint?
So the market share is ramping up very nicely, Nithya. Actually, the monthly data is more accurate than the weekly, typically, just based on what we see. And the latest monthly data that I'm looking at shows 9% plus market share of the generic market. So it's ramped up very nicely over the last couple of months. And we continue to ramp it up, both from a supply as well as the customer share gain standpoint. So we will continue to see that within this quarter and going into the next fiscal year. So
any comments on what kind of ramp up are you likely to see now that Perrigo's announced that they're unlikely to get back in the market this year?
Yeah, we're hoping to get to 20% plus share over the next couple of quarters, sooner rather than later.
Got it. Any updates on the Spiriva, both the filing as well as the litigation?
The litigation is ongoing, and on the filing, we continue to make progress with questions that the agency has. Still on track to launch it mid of next year, mid of 22. Yeah, and apart from Spiriva, question was also the other inhalation pipeline. So as we look at Q4 as well as fiscal year 22, of course, we have the albuterol ramp up. We have a couple of other products on the inhalation front, Nebules, Performist, as well as Brovana, that we intend to bring into the market in the US. We have Foster that we expect to get approval in the next couple of months and launch soon after. So, for the next fiscal year, it's, these 3 products in the US, albuterol, Performance, Brovana, and Foster in Europe. And then the following year, we would expect Spiriva as well as Dulera, hopefully.
Understood. Just a quick follow-up on Spiriva. So the kind of queries you're getting from FDA are the regular IR sort of queries, or do you have like a minor CRL, or what sort of queries are you trying to address? If you could throw some light on that.
Yeah, it's IRs.
Okay. Thank you.
Thank you. Requesting everyone to introduce yourself before asking the question. Next question is from Neha. Thank you.
Go ahead, Neha. Neha, you're on mute.
Neha Manpure.
Hello.
Yeah.
Can you hear me?
Yeah, go ahead.
Yeah, sorry about that. So, Vinita, just to reconfirm, you said Spiriva would be a mid FY22 product or FY23?
Mid calendar 22, so it's FY23.
Okay, fair enough. Okay. And second, in terms of, our cost optimization, I think, Ramesh, you mentioned that some amount of it is, reflected in this quarter. How much more, of cost rationalization or optimization should we see, particularly given the specialty rationalization is behind us, and R&D will probably now, as revenue ticks up, increase from here?
And as you recognize, this is a continuous effort. We have been working on, in fact, trying to improve upon our gross margins by actually looking at alternate vendor development, looking at routes to synthesis, and of course, we are also embarking on a digital journey. And very recently, we actually looked at rationalization of our workforce as well. All of these are actually reflected in the numbers itself. But as you recognize, it's a continuous journey, and we would continue to go down that path, and you'd see further improvements coming up.
So would it be fair to assume that the incremental margin expansion from here would be dependent on, probably our pipeline execution rather than, cost rationalization?
I would say it's going to be both. It certainly is going to be a function of the kind of products that you bring to the market, the kind of product that the kind of cost rationalization that will continue, and the kind of productivity that we see on the R&D and the SG&A front in terms of operating leverage.
Okay. And on the R&D front, if you could throw some light on our, progress on the complex injectable and, the biosimilar, where we are in terms of, trials or filing, any color there?
Sure. So on the complex injectables, we're making really good progress across the areas that we have focused on. On the depot products out of Netherlands, the first 2 products, we are ready to go into the clinic. Actually, the first product is going into the clinic this quarter, and the second will go into the clinic in the next couple of months as well. We have the liposomal products out of Fordos, where we're making really good progress as well. We would expect at least 1 filing in the next fiscal year. If possible, we'll try to get both the filings in the next fiscal year. On the peptides, we are making progress as well, getting ready to file a couple of products in the next few months. And likewise on the iron colloid products as well. So we've come a pretty long way on the complex injectables. And then on the biosimilars front, apart from etanercept, pegfilgrastim, we've made really good progress. Look forward to filing that to the US this quarter, and are getting ready to put together go-to-market plans, build commercial capabilities to launch it. Be ready to launch next fiscal year or early the following fiscal year.
And Vinita, besides PEG, are we doing any other biosimilar for the US market?
Yeah, ranibizumab.
Oh yeah, correct. Okay, and that goes into clinical trials this year.
Yeah, it is started
in phase 3. Okay, and despite all of this, we will keep the R&D at 9% of sales.
That's right.
Okay, thank you so much.
Thank you. Next question is from Mr. Tushar Manudhane. Please go ahead.
Yeah, am I audible?
Yes.
Just on albuterol, what kind of capacity utilization we are currently? If you can throw light there.
Yeah, we're fully utilizing our capacity right now.
And so this ramp up would happen over what period so as to gain this 20% market share?
We are in the process. It's ramping up month after month. So this quarter, we'll be able to produce more than the last, and we would see a full ramp up, I would say, in the next quarter.
So any roughly how many units per month kind of number you can share?
So roughly, you can assume the market is 70 million units, and we are targeting 20% plus share. So 15 million units. We'll have capacity to do more, but that's the kind of share that one should look at.
Got you. And just secondly, on Spiriva, on the litigation side, we are in the district court currently. So any further development in terms of what is the timeline for the outcome on the district court front at least?
I don't have the timeline right now.
Okay, that's it from my side. Thank you.
Thank you. Next question is from Mr. Prakash Agarwal. Please go ahead.
Yeah, hi, good morning to all. Am I audible?
Yes.
Yeah. Sir, just a first question on the US FDA. So, is there any dialogue that we are already into? We heard that, the Indian US FDA guys have started inspecting, one of your competitors. So is there an update of physical, audit inspection dates? And is there any progress in the US as well? Thank you.
Hi, Prakash. So there's been document requests and the like that we've been, answering, but there really isn't any traction on a firm date at this point of time. We're very hopeful with the fact that, I think pretty much the first inspection for an Indian facility started a couple of days ago. So we're hopeful that at least for the more meaningful mission critical inspections, FDA would increase their activity in India. So we're hoping that it picks up. But I think meaningfully, it's going to be, by the time vaccination picks up, by the time, travel opens up, I think it'll definitely be late in the second half of the year when we would really expect for meaningful FDA activity.
Okay, and from our side, we are fully ready.
We are. We've actually, we've gone back to FDA on sites like Goa and Pithampur and Tarapur, and we would obviously expect for FDA to come there sooner rather than later.
Okay, and any take on the US FDA that you saw, observation that you saw on the US plant? I mean, while you maintain that, you're ready across facilities, you again saw that 13 observations. So what's your take there? And by when do you plan to resolve that?
Yeah, and maybe I can start off when Vinita can add. But I think obviously, I think we were not happy with the fact that there were 13 observations. This was a tough, very long inspection. But that being said, it is what it is, and we have to be able to deal with it. Clearly, there were areas for improvement in Somerset. I wouldn't generalize that for the rest of the operations, because we have a pretty bespoke kind of plan for each facility as we gear up for remediation activities. So, for example, you saw in the past that Mandideep had a significant number of observations, which eventually went to a warning letter. There we have a very deep transformation program. In Pithampur too, we've had a very deep transformation program, not the same way in Goa or Tarapur even for that matter. So I wouldn't generalize across the board. And obviously, I think, again, there is a deeper transformation that is being conducted right now in Somerset as well. There were specific areas of improvement there. So, some of the things that happen there do not happen elsewhere. But, I think suffice it to say that, that this is one of our biggest priorities, to get it right. As you know, we had a very solid start in 2020, in the first quarter, first calendar quarter. 6 facilities we got the EIRs for, and still being cited for some of the observations that we have been cited for in the past. So I think we're moving in the right direction. Job is not done. I think perhaps job will never be done, but there's still work to be done on the compliance front.
Okay, thanks. And second question is on, you mentioned about R&D being at around 9%. So is this for 22, 23 as well? And what's the, kind of filing and launch expectation on both these years?
So the R&D would remain at 9% for FY22 as well. We're kind of in the middle of our budgeting, so we're still seeing whether there'll be a slight increase or not. So we'll come back later with more color on the absolute number as well as the filings and launches. In general, we file about 35 products. About 15 to 20 of them are oral solids, first 2 files. Exclusive kind of opportunities, a few opthal, a few derma. The injectable pipeline, as Vinita shared, is starting to pick up. So we're hoping sooner rather than later, we start getting to the 6+ filings each year on the injectable side, with a couple of them being the extremely complex ones as well. We're getting to a very good pace on the inhalation. So on the inhalation, we're increasingly looking at 3 to 4 products each year. Even right now, we've taken 3 or 4 exhibits, which will turn into filings for next year. So the inhalation pipeline is picking up. All in all, together getting to 35 products for the US, and obviously a subset of that goes to other geographies as well.
Okay, and this year clearly an aberration. We are at 6 for 9 months.
Yes. It's so we typically do see this lumpiness in Q4. So you will get more filings in Q4. Some of the exhibit dates moved out because of scheduling issues with CROs and the like, when COVID was more an issue in India. But you'll see that starting to even out.
Okay, thank you. I have one more, but I'll join back with you. Thank you.
Next question is from Mr. Surajit Pal. Please go ahead.
Surajit, you're still on mute.
Surajit, you're on mute.
Yeah. Am I audible now?
Yep.
Yeah. So on cost front, in a sense that what part of the employee cost is one-off this quarter?
Yeah, there is an element of one-off because obviously if you rationalize, there is some payments to be made and the like.
So can you quantify that?
So there has been, we have not quantified that, but having said that, if you recall, The first quarter we had, it was 794 crores. The second quarter we came down to 685 crores. This quarter we also gave increments and the like, and there was of course people who left us, and there was some rationalization payments that was made. So all of this put together is the figure that you see, but payments that you made would not be material, not be huge.
Okay. You said your adjusted EBITDA is around 18.6 vis-a-vis 20.6, which is the reported one. So this 2% gap is entirely Forex or any other?
So there is a one-time income which has been captured in here, which if it would be taken off, there would be a reduction to that levels. You would also recognize that there is actually a reduction on MEIS. All of this actually going to the other operating income line. So we'll have to take that. That line itself would be about 25 to 30 crores on an annualized, normalized basis.
Okay. Improvement in your gross margin is entirely because of favorable product mix this time?
Yes, there are several factors. There has been this continuous effort to kind of shore up the gross margins, which has been happening for some time now. The second, of course, the sales mix, including in fact albuterol coming in. The third, of course, in terms of lowering of the overall freight cost itself vis-a-vis the previous quarters.
Okay. The last one is that what was your branded sales in US this quarter?
It was small. It was a couple of million.
Yeah, it was $2 million.
$2 million. And what would be the number of people currently in the branded business?
Number of what?
Number of headcounts?
We have a 40 people sales force.
43. Thank you and all the best.
Thank you. Next question is from Mr. Sameer Basiwala. Please go ahead.
Yeah, thank you very much and good morning, everyone. Nilesh, how are you thinking about the plant inspection for Spiriva?
So we've been inspected in the past for Spiriva already. But we are going through, like Vinita said, there is an active conversation going on with the FDA. I think there's still some hoops to be covered. We still feel very good about that 22 launch.
And you would not require like a plant visit or plant inspection won't be a bottleneck. Is that correct?
Like I said, we've been inspected in the past, specifically for Spiriva. So unless they want to re-inspect for whatever reason, we've done that before. But I think there's still a little bit of ground to be covered before we have the Spiriva approval. And no showstoppers, but still some ground to be covered.
Okay, and Nilesh, clearly you guys are very confident of mid-2022 launch. But the time is not enough for the court case to get resolved until then. So how are you thinking of resolving that?
Sure. So
I think that, so go ahead, Nilesh.
Oh, please go ahead, Vinita.
I think we would have a district court decision within a year. I don't have the exact dates, but we would expect it within a year.
Okay, that's great. And the second thing is on biosimilars. How's Enbrel doing in the market? Any color on the market share, etc. And second is on Pegfil. Being a third or fourth entrant, do you think there would be enough value left in the market, given that even the current incumbents are struggling a fair bit?
So on etanercept, Sameer, the ramp up is slow. I mean, it's more of a branded build, in the European market. And our partner Mylan has chosen markets where we have the opportunity to maximize from a pricing standpoint. So far launched in Germany, France, and Belgium. No, Germany, Belgium, and one smaller market, but we're getting ready to launch in France. So we would expect in the next 12 to 24 months, for the product to be rolled out in all the key markets. So it's a slow build-up of share. On pegfilgrastim, we certainly believe that it continues to be an attractive opportunity based on the go-to-market plans that our team has built and the segments that we are targeting. We believe that it should continue to be a reasonable opportunity, especially given the dynamics in the the biosimilars market. You don't see the kind of price erosion. Of course, we'll have to earn our share, which our team is working on the strategies to make sure that we do. But looking forward to that launch in calendar 22.
Okay, and with your permission, one final one. Vinita, what's your updated thoughts on Solosec and its ramp up going forward? Do you think it would remain slow or anything to really accelerate it?
So there are a couple of accelerators, Samir, but the biggest decelerator is COVID. With the COVID environment, just the access into the OBGYN office for acute care product in particular has proven to be really tough. So the accelerators are, we continue to really get additional formulary access, through recent, efforts around the DoD. We have been able to get the product in. So that is a positive. We have the trick indication, which again is an opportunity to reposition the product. So really nice opportunity in the summer. We expect that in June. So right now we're gearing up to launch the trick indication successfully in June, and are hoping that with the vaccine rollout, things start improving by mid of this year. So I'm hoping that we start seeing real traction in the second half of this calendar year. So far, when I look at it quarter on quarter, the scripts have kind of flattened, and with some of the gross to net improvements, one has seen some pricing improvement quarter after quarter. So, but I think a meaningful build, I think would be after the trick indication launch, and for the COVID environment to abate a bit as well.
Okay, great. Thank you very much.
Thank you.
Thank you. Next question is from Mr. Dev Daga. Please go ahead.
Hello, am I audible?
Yes.
I wanted to know, given that we have had an albuterol ramp up this quarter, so why has our top line not grown proportionately as compared to the previous quarters?
We said that, right? Vinita, you might like to address this question, but that's essentially because the fact that there has been a very poor, flu season across various parts. So products in America didn't sell as much. And equally, when it comes to the API products, the demand for, in fact, the antibiotics across the globe was very poor.
So if you look at our growth, we still had year-on-year growth in the US of 5%, despite the fact that we've really not had, there's no flu. It's one of the weakest flu seasons in a while. So all of the demand of the flu products, the cephalosporins, Tamiflu has been really, really weak. So that obviously is we've not had a contribution from flu products. The other area compared to year on year is metformin. That we unfortunately had to withdraw because of the NDMA issue. We relaunched in September and are in the build mode right now. So when you compare to the last year, both the flu products as well as metformin products are really missing in our top line. And the flu products, we'll see if we have a late flu, this quarter. But the metformin products are building right now. And then Glumetza was relaunched, and we are well on our way to earn our share back again. And this quarter, we expect to launch also the Fortimet product.
Okay, thank you. That helps. And my second question is, we've seen a very good growth in the rest of the world business this year. So can we expect this going forward, or will we see other geographies ramping up in the next quarter?
Your question was that the rest of the market has grown.
Yeah. So in the next quarter, can we see a similar growth in this business, or will we see the other geographies showing better growth?
So the markets are growing. So if you look at, for example, Brazil, so we have been growing steadily over the last few quarters. We've done a great job there. Other markets are just about opening up. For example, if you look at markets like Philippines, it's perhaps going through its worst depression in several years. Mexico is just about opening up, and it was okay in Q3. India also, so India was again, in terms of acute therapy, the overall prescriptions have been lower. So you would expect all of this to ramp up. So you would expect, in fact, the rest of the world, including India, to certainly go up in the quarters to come.
Okay. And what about the other geographies? Where can we see growth concentrated? Europe, US?
They would, so if you look at America, you got Albuterol the full quarter ahead of us. So there would be a ramp up there. You got products for Europe also, Namuscla, it's still ramping up. So all of this will certainly see growth. And as with South Africa Q4 generally is in fact a very good quarter.
And India also, Ramesh, obviously will get back to that, double-digit growth in the next year, which is obviously single-digit at this point of time.
Okay, thank you.
Thank you. Requesting everyone to introduce yourself before asking the question. Next question is from Mr. Ankush Mahajan. Please go ahead.
You're on mute.
Ankush.
Still on mute, Ankush.
Okay, we'll move on. The next question is from Mr. Nitin Agarwal. Please go ahead.
Hi, thanks for taking my question. Just one question on the QOQ business that you talked about in the US sales. Barring ProAir, how has the portfolio been on a QOQ basis? How has the other ex-ProAir portfolio grown in the quarter, Albuterol portfolio?
So ex-Albuterol, Nitin, the baseline business has been fairly stable. And we've had some contribution from the new product that we've launched in the last couple of quarters. For example, Lepatinib has grown a bit, as well as we ramped up, or we're in the process of ramping up really products like Vimovo, and we launched Tacrolimus. Just got very little of Tacrolimus. We should see a better contribution this quarter, and Aprizo. So there are a couple of products apart from Albuterol, but the largest contributor being Albuterol, in terms of quarter-over-quarter growth.
So, and the reason I was asking, Vinita, was, QOQ, we had an $8 million increase in revenues, which seems, given the fact that ProAir, Albuterol should have contributed a fair bit. So that seemed a little surprising in terms of being a little on the lower side.
So some of the, ProAir has been a good contributor, but the others are smaller.
And I think even lower sales of the flu season products, right, Vinita? So that is further, those numbers are depressed in Q3, even over Q2 a little bit.
Yeah.
Okay. Yeah. Okay, perfect. And secondly, on you were mentioning about the key launches over the next couple of years. Where does Suprep fit in this sort of schematic?
It's fiscal year 23 launch.
And is it going to be a reasonable launch for us? How are we looking at it?
Yeah, I think it's a reasonable sized product. It's good $200+ million product where we are first to file and we have a final approval.
Okay, perfect. And secondly, Ramesh, on the ETR, what should we, how should we look at ETR now over the next couple of years? Do we see it coming down to 30% over the next couple of years?
Yeah, this year you'll perhaps see an average rate of the mid-30s. But going forward, you would certainly could expect the lowering of the ETR.
Okay, and sorry, if you can do the last one, Vinita, on the specialty side, you mentioned that the field force now is 40 odd million, 40 odd people. And given the size of the infrastructure that we have for the specialty business now, what typical size of specialty business do we need to start breaking even on the business?
So depending on, of course, the margin of the product, but around 20 million.
20 million annualized. That should be enough for us to break even on this business now.
Mm-hmm.
Okay, perfect. Okay, thank you very much.
The other way to look at it is, do we also get other products into the portfolio so that we can actually defray that expense base over a larger revenue base?
Right. Got it. Thank you.
Thank you. Next question is from Mr. Prakash Agarwal. Please go ahead.
Yeah, thanks for the follow-up. So just, on this 40 people MR, is there a further rationalization or cost savings possible there? Or this is the minimum threshold we want to keep as we also talk about adding more products?
Yeah, so we are in the process of looking at what we need for the trach launch, Prakash, which we want to do effectively, and obviously looking at other products as well. So we'll take a call in the next 2 quarters, depending on both, in terms of what is the optimal size.
Okay, got you. And I don't know whether I missed this other operating income. You said there's some litigation income. Could you explain that, please? I mean, because you mentioned that there's a 30 to 40 crores kind of the export incentive that was there, but was the remaining 70 crores?
So we made that very clear. So the annualized number, it would be about 25 to 30 crores. This is because of the fact that MEI's export benefits have been called off by the government. This quarter, there is also, we recognize some litigation settlement, and that's reported in this the overall figure.
Yeah, I understood that, but if you could give some details on litigation settlement, what is this related to?
Unfortunately, we are not in a position to share further details at this stage.
Okay, so you're just calling out this is one-off at that point. Yeah.
That's correct. Absolutely. So we're making it very clear that it is one-off.
Okay, perfect. And second one also for you, Ramesh, on the tax rate. So there's a clear call out on some of the subsidiaries which have turned profitable.
Yes.
And you mentioned that you expect they're likely to be so in future.
Yes.
So how do we see annualized tax rate for this year, next year, and year after? Ballpark?
Clarified. So this year it would be in the mid-30s, but progressively it will certainly come down because the most important subsidiary for us is America. And given the kind of first introduction of products, second the kind of rationalization that has taken place, it will be profitable. Other was essentially Brazil. Brazil has also turned the corner. It's profitable at this stage. So things should only progressively become better for us from an ETR perspective.
So around 30 for next year?
Yeah, slightly lower.
Okay, understood. Perfect. No, that'll be all. Thank you so much.
Thank you. Next question is from Rajakumar Vaidyanathan. Please go ahead. Mr. Rajakumar, please introduce yourself before asking the question. Thank you.
Yeah, good morning. My name is Rajakumar. I'm an individual investor. Thank you for giving me the opportunity to ask questions. So I have a couple of questions. So the first one is with the Democrats coming back to power in the US, just wanted to know what is the pricing scenario the management is expecting. Do you expect any pressure on the pricing, given that they have kind of said that they will make the healthcare more affordable go forward? That is my first question. And second question is on the albuterol. Just wanted to know, how is the competitive landscape given that Cipla also has a significant share. So just wanted more color on this. I'm sorry if this was answered earlier. I just joined the call a little late. Thank you.
Yeah, so on the pricing environment, it's early days, but we really thought that both the Democrats as well as Republicans, there was bipartisan support in terms of looking for ways and means to make drugs more affordable. So, pricing, especially pricing of high price brands, biologics, oncology drugs would likely be under pressure. But, we really see it as an opportunity for affordable medicines, the part of the business that we participate in from a generic side. Obviously, all of our generics are affordable medicines as well as biosimilars, affordable versions of biologics. So we see it as a positive for the generic side of the industry. On albuterol, certainly Cipla had a head start from a timing perspective into the market. So, and then, after we launched, we ramped up our share in a couple of months to 9% plus with, while still ramping up our supply. And we see a really good opportunity for us, given that we are the only true generic to ProAir, which is the largest part of the market. With Perrigo going out of the market, Lupin is the only true generic to ProAir, and have the ability to ramp up to be the largest product, from a generic perspective. So we're looking forward to the next couple of quarters, this quarter, next quarter, to be able to ramp the product up.
Thank you, Vinita. Thanks. That's helpful. Thank you.
Thank you. Next question is from Mr. Rakesh Junjunwala. Please go ahead.
Good morning and congrats on a fine performance. Ramesh, why should your rate of tax be in the 30s here? Your Indian income is 25%. The rate of tax in America is 20%. You have carry forward losses in America, so I don't understand why a rate of tax should be anything beyond 25.
Mr. Junjunwala, the fact is, we still have, a subsidiary in Amsterdam, in Holland, which actually is a research subsidiary, which is still to make profits out there. We still not commercialize products and so on. So that is the reason why it is what it is.
That's a very small subsidiary here. How much loss can you incur in that? 100 crores, 50 crores?
Yeah, so America has turned profitable this quarter, so going forward, as I said, it will certainly impact, there will be a reduction in the overall ETR.
No, but in America, you have carry forward losses. I think so. American income won't be taxable.
Yeah,
Here, the rate of tax is more than 25%. I don't know what the rate of tax in Brazil is. So I don't understand how your rate of tax, your Netherlands subsidiary will incur 100 crores loss. How much more? So I don't know how your rate of tax should be more than 25%. I think you better look at it finally and come back here.
Okay.
We will, Rakeshji. I mean, I think Ramesh mentioned sub 30%, so we'll come back.
So there's a lot of difference between 25% and 30%, man.
I agree.
I think you need to study this more correctly and report to us.
Will do, Rakeshji.
Anyway, congrats on a fine performance.
Thank you.
Thank you, sir. Next question is from Mr. Shyam Srinivasan.
Hi, good morning, good evening. Thank you for taking my question. The first one is on the US generic pricing environment, Vinita. So anything that you can share? 2020 was kind of benign, but calendar year 2021, do you think things could get worse off from a pricing perspective?
I mean, what we heard at JP Morgan from all of our peers as well as our customers was a relatively speaking stable environment on the generic front from a pricing standpoint. So, we are hoping that it continues to be the low single digit erosion.
Yeah. Just extending that. So the conversations with the distributors, the supply chain in the US, is there the same angle that we had last year, which is reliability of supply? Do you think that theme continues to remain in 2021?
Yeah, reliability of supply is very important to them. That continues.
Got it. Got it. Thank you. Second one is on levothyroxine. Can you help us understand? I think we have talked about contracted market shares in the past. So where are we right now, and what's the kind of upside on levothyroxine?
So we are at 17% plus of the generic market share, roughly 14% of the overall market, and still working towards that 20% plus share. So, a couple of percentage points away from that 20% plus share.
Yeah. So Vinita, is that like a hurdle you think, or we have done well? So I'm just trying to see, can we go higher? It's a large market, but is there any impediments to taking share higher than that?
We think that unless we have an opportunity, just given the new entrants that have come in as well, it makes sense to really target really that kind of share and then see, depending on the opportunity going forward. But it's a material product, and switching the product also, switching share is also not that easy, as you've seen, over the last couple of years. Customers are fairly reluctant to switch share, just given that it's a narrow therapeutic index product.
No. Got it. Last couple of questions. We have talked about the product momentum going from whatever single digit in the US to, healthy 25, 30 products. So where will these product approvals come from? Which plans, or are they, can you just help us understand from where these approvals could likely come? Which plans, I mean?
Yeah, so a number of our plants. So, for example, all of the inhalation products. You look at albuterol from Pithampur Unit 3. Spiriva is Pithampur Unit 3. Our Nebule products are outsourced; they're contract manufactured. So those are the major products. Foster is Pithampur Unit 3, as well as Coral Springs. We have both sites qualified for Foster. In fact, we are qualifying both sites, US as well as India, for a couple of other products also, where there's government channel business that we can access potentially. So we have the near-term products from these sites, and then we have products coming out of Nagpur. We have products coming out of Aurangabad. We have products coming out of Pithampur Unit 1.
Got it. So largely the unaffected plants. We're not building in like anything coming out of some of the OAI affected plants. Would that be right? Would that understanding be correct?
That's right. I mean, our material opportunities are from these sites that I just mentioned.
Got it. Got it. And my last question is on the PLI scheme, the one that we had the first results come out in the antibiotic space. I was surprised to not see Lupin, but maybe we were never in consideration. So just wondered your thoughts on the scheme in general, and do you think it makes sense, or did we pass it completely? Thanks.
Maybe I can take that. I think the second version of the PLI scheme is going to be even more powerful than the first one. They still have to announce the entire list. There's some smaller products that we are playing a role in the initial. I think there still has to be overall alignment with the business strategy. But I think the second version of the PLI scheme gives room for a lot more to be done, and that is somewhere where we believe we would participate meaningfully.
Nilesh, when you mean second version, is it the rest 46, 47 drugs, or you're talking about the formulation PLI?
The formulation one.
Got it. And do we know any timelines? Because it seems to be in the press, but do we know anything?
No, I think it's still in Parliament, right? So I think it's still to be a couple of months away. I do see this as something which rolls out in the next 2 quarters, though.
Got it. Thank you so much and all the best.
Next question is from Mr. Sameer Basiwala. Please go ahead.
Yeah, thanks for the follow-up. Veda, can you talk a bit more about commercialization angle for Foster once you get the approval in the next couple of months? What sort of a market share ramp-up do you expect, over a year or two, and the competitive scenario for this?
Yeah, it will build because it's a branded like product, so it's going to be building over the next 2 years. And we will start in UK, but have plans for all the other countries as well: Germany, Italy, France, Spain, the main countries. The majority of the Foster brand market. And from a competitive standpoint, we believe that we have the first mover advantage, but think that there may be 1 or 2 players behind us. And for a 600 million euro product, it seems like, with 2 or 3 players, it's still going to be a reasonable market.
Any indicative pricing that you think, once the competition settles down? Just a broad range, does it go down 50, 60, 70, 80? Anything that you can share?
I mean, I don't have it off the top of my head, but I know that it operates more like a branded market, just given that you need to have a sales force in key markets like the UK. So I would think that pricing would, strategy would follow the investment model as well.
Okay, very clear. Yeah, thank you very much. And one more, how is the company thinking about M&A opportunities going forward?
We're focused on a specialty build, where we can. And apart from specialty, also looking at areas that we can accelerate on the generic front, like injectables in particular for the US, and opportunistically also for India to scale up our business in India, especially in therapy areas where our share is not at the top level.
Okay, great. Thank you so much.
Maybe we take one last question.
Thank you. We'll just take one last question from Mr. Ritesh Rathod, and then we'll go for the closing comments. Ritesh, please go ahead.
Yeah, you mentioned 20% market share for Albuterol, which is 14 to 15 million devices. So when you said 9% market share, you mean you are at 6-7 million devices annually?
Yes, roughly.
Yeah. Okay. And second, on the cost optimization front, for each line item, whether it's the employee cost, R&D, and the other cost, you mentioned about R&D about 9%, but for the other 2 line items, on a medium-term basis, where we are in the journey, like what we are targeting as optimization,
No, from my
the percentage to sales.
Go ahead, Ramesh.
Yeah, from our perspective, so we are saying that our EBITDA margins should be actually about 20 to 22%. If there are, products being introduced, etc., it could spike to a higher level. But I think the base level should be about 22%. So the endeavor is to make sure that the cost lines are contained in such a manner, the EBITDA margins reach those levels.
So would it come more from other expenses, or R&D will go down as you scale up, or employee expense?
From all lines, from our perspective, it is of course on the gross margins. It is of course making sure that the ramp up on the manpower doesn't happen as much, and of course the operating leverage clicks in, and R&D productivity for sure. All of these would contribute to keeping the EBITDA.
Okay. And Ramesh, on the EBITDA, is there any forex gain or loss element within the EBITDA number?
No. So we reported 18.6 without taking into account the forex. The forex loss for this quarter was 28 crores.
Okay. And just on the first question of 6-7 million devices, I presume it's not fully reflective of the quarter. It would be month end of the quarter.
it's just think about it as annualized 20% target. Yeah, and 9% building over month after month, obviously.
Oh, yeah. Thanks. That's from my side.
Thank you, Mr. Ritesh. I now hand the conference over to the management for closing comment.
Thank you very much for your contributions, and look forward to connecting with you in the next quarter. If there are some questions which have not been answered, you can always deal with them offline with Mr. Botra and Mr. Swaminathan. Thank you very much once again for your participation. Bye for now.
Thank you. Thank you, everybody, for joining so early. Bye-bye.
Bye-bye.
On behalf of Lupin Limited, that concludes this conference. Thank you for joining us, and you may now exit the webinar.